So as was mentioned, just to give you a little flavor of what we'll be discussing, it'll be the IIS's work on operational risks as well as cyber resilience and cyber underwriting, and share views on lessons learned from the COVID-19 pandemic. As insurance supervisors focus on these growing risks, the panel will also consider the work of the IIS's undertaking to gather data on cyber risks as part of this year's Global Insurance Market Report special topic. And I'm really pleased and grateful that our panelists have been willing to join today, and we drew the one right before dinner and the reception, so thank you for those of you that are here, and hopefully some others will continue to gather in. Just to give you just a quick bio, I know that the bios are on the website, but to share a little bit about each of our panelists. Jad Aras is the Managing Director of the Geneva Association. Rebecca Bull is the Head of Industry Engagement at CyberCube, and Rebecca is joining us virtually. Thank you, Rebecca. And Todd Kozlow is the Chair of the IIS ORTF and is the Assistant Vice President at the Federal Reserve Bank of Chicago. And Stephanie Ott, Head of Group Qualitative Risk Management at Swiss Re. So thank you again, and a quick round of applause for our panelists for joining. Thank you. Okay, I think here at the outset, Todd has agreed to do a few minutes on the work of the ORTF and the GMAR, I believe. So Todd, the floor is yours.
That's right, Gary. Thank you. Thank you for having me speak today on the panel. So I am recovering from a sinus infection. It is not COVID. I tested negative 6 times, so forgive me if I have a cough. But my name is Todd Kozlow. I am an Assistant Vice President at the Federal Reserve Bank of Chicago, where I lead supervisory teams that are responsible for assessing cyber risk, technology service providers, as well as payments and fintech risk. The comments today are my own and are not representative of the Federal Reserve Bank of Chicago nor the Board of Governors. And so I do have the honor to chair the IAS Operational Resilience Task Force, which is currently developing an issues paper on supervisory practices and challenges associated with cyber resilience, IT third-party outsourcing, and business continuity management. It's a very interesting space because it's so fast-moving and changing pretty much every day. And so not only are we looking at what risks are changing for our institutions, but how are the supervisors changing themselves and adapting in this environment. And so the ORTF issues paper will focus on a subset of issues most relevant to supervisors, including how we are approaching and assessing the quality of cyber resilience frameworks, concentration risks associated with third-party outsourcing, and how business continuity has evolved, especially during the pandemic. We're aiming to launch a public consultation, hopefully on the issues paper in Q3 of this year. Now on GMAR, one of the outcomes of the collective discussions last year was to perform a deep dive analysis into cyber risk, which will be the focus of our GMAR special topic this year. The report will cover developments and risks in the cyber underwriting market, cyber resilience of the insurance sector, assess the impact of these risks on financial stability, and the future of cyber risk monitoring in our GME. The report will be published in the fourth quarter of 2022, and we hope to be able to go into greater detail on the current status of the underwriting market in the report. Having said that, we hear from members and other stakeholders that we're currently in a hard market. I'm sure firms are perhaps happy about that, mainly driven by ransomware claims, so maybe not so happy about that. So premiums have increased, and insurers are deploying a number of risk mitigation strategies, such as lowering limits on policies, carving out some cyber risk from current policies, and covering risks in those standalone, increasing deductibles, typical risk management practices. The status of the reinsurance market is very similar, and with the added pressure of higher than normal natural catastrophe losses in 2021. So as all the hard markets and cyber threats, they come in cycles. It's difficult to precisely point out where in that cycle we might be, but the higher premiums and some progress on ransomware seem to suggest that perhaps the peak of the cycle may not be too far. So thank you, Gary. I'll turn it back to you.
Yeah, thank you, Todd, and thanks for sharing. I appreciate your leadership on the ORTF and the work you're doing. We'll look forward to the work ahead. All right, so we'll start right off into round one, which this particular topic will focus on cyber operational risks. So it's going to consider the risks that insurers face to their own infrastructure from cyber attacks. So the polling question for this particular topic area is how has the insurance sector's ability to manage cyber risk changed over the past 2 years? Has it decreased? Is there no change, or has it increased? And so for the questions, why don't we start with first with Stephanie, and then Rebecca, and then Todd. And the question that we'll kick it off with is, in the past few years, threats to insurers' cyber resilience and operational resilience more generally have accelerated. What are the major challenges for supervisors and the insurance industry with regards to cyber risks? So first, Stephanie, if you wouldn't mind.
Thank you so much, Gary. So I think jumping right into this topic, if we maybe rewind back 10 years, a lot of effort has been put in, especially by the bigger companies, insurance, reinsurance companies, in investing in their cyber defenses. We had a big program at Swiss Re called the Cyber Defense Program, which ran over the course of 4 years. And those defenses now tend to be reasonably strong, well understood. There's a lot of penetration testing going on. There are different layers of protection. And I think that work is paying off to a large extent. What is happening at the same time in all our companies is really much higher dependency these days, however, on third-party service providers, cloud services, new technologies coming up, in addition to the fact that, when we have issues, maybe the defenses are strong, but if they do get penetrated, how do you then do the recovery? So it's connecting the business continuity plans to maybe the IT continuity plans, but also understanding where your data is. So there's a lot of, the environment is changing tremendously fast, and I'd say if I was asked to say what right now is the biggest risk, it's really not always understanding the end-to-end view and understanding the dependency on these third-party providers, and the third-party providers are taking over more and more the crucial elements of some of our processes. And it's difficult because we're highly regulated as an industry, and a lot of our providers are not. So there's plenty of challenges there for us as an industry to try and work with them, but there's still just a reliance on them. So I'm assuming the supervisors, and I know in the EU there's a lot of talk on what can be done to support so that the end-to-end view is as solid within the insurance industry as it is within the providers.
Yeah, thanks, Stephanie. And Rebecca?
Yeah, thanks, Gary, and thank you for allowing me to be the massive talking head on the screen in the room. I really appreciate you allowing me to join, even though I couldn't be there in person. I suppose one kind of overarching main challenge that I would identify for supervisors and the insurance industry alike is that cyber is fundamentally, it's a man-made risk. So unlike with natural catastrophe perils, we have a sentient adversary in the cyber realm, and we've got very highly motivated, often well-funded criminals adapting their techniques to breach security defenses put in place by corporations, some of the great programs that Stephanie just referenced. So I think fundamentally, that is really a challenge, not unique to cyber, because obviously we have, terrorism risk as well falls into that category, but certainly one that, does throw up some particularly unique challenges. To the first part of your question, Gary, I mean, you referenced the last few years, and I'm kind of going to take 2019 to 2022. So during, the COVID-19 pandemic, and maybe just share a little bit of context from the cyber perspective as to kind of what has changed, and then touch just briefly on kind of how that impacts insurers from what CyberCube is seeing. I think, there's definitely been a proliferation of cyber attackers. There are now many more criminal gangs and nation state sponsored groups than there were a few years ago, and access to the toolkits required to actually carry out attacks has become a lot easier as well. So many more adversaries out there in the first instance. So secondly, the sophistication of those attacks has increased. There have been new techniques developed to deliver some of these attacks, both at scale. You mentioned ransomware, which really is has exploded in the last 2 years, 3 years particularly. But another type of attack that arose out of COVID was the greater ability to target key points along a digital supply chain. So Stephanie mentioned that there are vulnerabilities there in that digital supply chain. There certainly are, and some of those key technologies that are used widely across a number of companies, across industries, across regions, certainly have been exploited. And then I suppose the third thing that's happened really of note in the last 3 years has been an acceleration in the adoption of technology as people have been forced into remote working at a faster pace than I think would have happened just naturally. And I think we'll touch a little bit later on some of the sort of details there, but yeah, moving to the cloud is a really obvious one. IT and security teams have found it harder to ensure that security training and software patching is up to date. And also, employees juggling, working from home, maybe homeschooling children, a whole load of distractions have been more susceptible to social engineering attacks, for example. They may be distracted when they're on their devices. I'll quickly just touch on how the insurance industry may be particularly vulnerable as a result. I think, in terms of the exposure, the sort of value that the insurance industry poses for a cyber attacker, and therefore, their incentive to carry out an attack against an insurance company. I think particularly with reference to ransomware, criminal gangs have an interest in gaining access to policyholder information, which allows criminals to target companies, maybe set ransom levels where they know that insurance policies are in place. And we've seen, a couple of incidents of insurers being targeted by ransomware recently. And then from a security perspective, Stephanie's right. I think, again, CyberCube's data shows that the insurance industry is coping pretty well with the changes in business practices, and they're not really soft targets for criminals in terms of their own cybersecurity. There are other more vulnerable industries out there. So yeah, I think the insurance industry in terms of vulnerability is in a pretty good place.
Thank you, Rebecca. Well, we'll send it over to Todd to share some thoughts.
Yeah, maybe really quickly. I mean, I think that point, Rebecca, of, anyone in this room can go on the internet right this second on their phones and buy a ransomware package to launch on your own. It takes less than a fraction of a Bitcoin to go out and get it. And so the proliferation of the tools is something that we've seen over the last few years, that malicious actors are willing to not only offer the tools, but also service the tools as well. And so this notion that this risk is going away is far from the truth. If anything, it'll be easier and easier for non-technical individuals to be able to launch attack vectors against pretty much any firm that they want. And what you're seeing in the landscape now is also a shift away maybe from some ransomware to business email compromise or other kind of vectors that are maybe more profitable for them. Because for the most part, at the end of the day, what we're seeing is the individuals that are launching these compromises are looking for compensation in some fashion or some form. I think information sharing always comes up as the perennial topic of how do we continue to share threat information in a timely manner, not only across firms and their regulators, but across regulators as well. And so I think, I know the ORTF, well, it's not our focus today, is we have talked about this a little bit and trying to see if there's more work that maybe we can do in that area.
Thanks, Todd. And so we've talked a little bit about maybe some of the challenges, vulnerabilities. So maybe a couple follow-up questions. And the first, what do insurers and supervisors need to pay attention to when they're assessing the quality of cyber resilience frameworks? And for this one, maybe we'll come back to you, Todd, if you don't mind, and then over to Stephanie after that.
Sure, and I think any good framework identifies risks, assesses that risks, mitigates it, monitors and reports it, right? And I think especially in the pandemic, what we saw from across kind of firms and industries is firms are really good at adapting, but there are a lot of decisions that are made in the business level that may not always bubble up. And so to senior management or board reporting, because it's always difficult to decide what is reporting worthy for these. But patch management comes out as one of the ones that is a really interesting topic. There were so many patches that were coming out that and everyone was remote, that institutions essentially had to prioritize which patches were going to get into place when. And one of the ways we saw some better frameworks working than others is where they risk assumed some of those things that they weren't patching made it to senior management and the board. And so that there was some understanding that we cannot be perfect. We are not expecting anyone to be perfect. But where you're not perfect, at least be transparent about where you're maybe taking some more risk due to extraneous circumstances.
Stephanie?
Yeah, so I think there are also, for many of us who are maybe not deep IT cyber experts, there are a lot of basics still, though, and I think some of the things that Todd said about, what makes up a good framework. So if we think, for example, there are today a lot of commonly used components in applications, in software, and we had the example of the log2j, where it then affects a lot of different areas potentially of business and a lot of businesses all at the same time. So going back to the end-to-end view, good third-party management is one way. If there's a heavy reliance on third parties and in the process, where do they sit? Are they understood? So having good inventories of those third-party providers, for example. Also having good oversight. Another element would be, how is the balance between the teams in terms of what's the focus? The technology, or is it the organization, the framework, the people? Hiring good people is really challenging in this space, and as insurers, we're not known to attract the best and the brightest in terms of IT. So there are a lot of moving parts, but a lot of them are also not very, very technical necessarily, in order to assess how comfortable can you be, whether it's a supervisor or whether it's if you're part of a supply chain and you're looking at your third parties, to say how good are they? So basics, patch management, penetration testing, those things are maybe more technical, but also the rest around it and how it's managed, how it gets reported out, how senior management pays attention, how heavy is the investment in these types of areas, and good operational risk management, which also comes with a lot of good common sense that's not always technical, I think is a very good place for a lot of us to start.
Thanks, Stephanie. So maybe I'll follow on a little bit to that, and we'll go to Jad first and then back to you, Stephanie. Curious about what are some of the actual steps that are being taken by insurers to safeguard their infrastructure, because these attacks are rapidly evolving. So first to you, Jad.
Yes, thank you, Gary. Let me start by emphasizing that it is a real pleasure for me to be here, to see so many people in person after 2.5 years of virtual interactions, and thank the IIS for the invitation. I'm going to answer your question. I'd like to start with two introductory comments. The first one is, this is under the operational resilience work of the IIS, and I think there's something we should celebrate, and maybe we don't emphasize it enough, is how quick and successful the insurance industry has been in literally in a week's time switching from the usual functioning to the remote functioning at the beginning of the pandemic. I think we don't don't emphasize this enough. I think we all need, both on the supervisory side and on the industry side, a big kudo for this, because really insurance operations have continued very smoothly. Underwriting has continued. Claims payments have continued, and I think this is a manifestation of the resilience of the industry, and that the work that both the supervisors on one hand and the industry on the other hand are doing, how well they were somehow prepared for this. The second introductory comment I'd like to make is, and this was emphasized by Stephanie, yes, the world has changed immensely in the past few years, not only because of the pandemic, because insurance companies, which used to be, I would say, fortresses, are now much more open animals. Many insurance companies are developing B2B2C models, which means their systems are now open to distributors, which may be retailers, which may be telecom companies, etc. And so there is much more room for flaws in the security systems, which need to be tested, for which we need to improve resilience. So these are the first two comments. So what are insurance companies doing to address these risks? I think they are doing four things. The first thing they are doing is at the technical level, protecting not only their infrastructure but also their applications and their data, use of encrypted data, use of backups, firewalls, etc. But I would almost say this is not the most important thing they're doing. They're working a lot on their people, actually. And so it's very much about the architecture of use of rights, and increasingly the philosophy they are adopting is the least access. So when there's a question mark whether employee X should have access to this database or not, well, if it's not obviously clear that he needs to access this database or this application, you'd better refrain from it. So working very hard on the architecture of use of rights, on the authentication of user identity, massive training programs to build awareness, sensitize all employees on not clicking on links on emails which may be suspicious, how you identify suspicious emails. I mean, I can take my own personal experience. Before joining the Geneva Association, I was working for an insurance company, and at, half a dozen years ago, I was terrible at this. So every time we had fake phishing, I would always fall into the trap, and over time I improved, and now I've become the other extreme, paranoid. So you do develop these skills over time. I think what is important to highlight here, so first working on the technical actions, two, working on people. What I also want to emphasize is that the philosophy that many insurers are taking has moved from trust but verify to zero trust. The zero trust philosophy, which means that in a digital transaction, a validation is needed at each stage. So you don't start with the hypothesis that you should trust a user or an interface with an outside app, but that you should mistrust it and so check every step. So I think this is a very big change in philosophy that we have seen recently. The third thing that they do, that insurers do, is do dry run tests, fake attacks. And there are different techniques for this. Sometimes insurance companies use outside professional hacking firms to conduct penetration tests or attempts to penetrate the systems of the insurance companies. Sometimes insurance companies have their own team, which are sometimes called red teams, separate from the IT organization of the IT hierarchy, to conduct those tests, to test the resilience, the vulnerabilities, and to draw lessons from this. And of course, under this test, what is very important is the crisis management governance. So if systems are out, what happens? Does the executive committee meet? Where does he meet? Can he meet remotely? Not necessarily. If the networks are not working, who is responsible for what? How much time does it take to reach all of them? So all these questions, very practical questions, which insurance companies have matured a lot over the past few years. And the fourth, I would say, pillar, so working on systems, working on people, doing tests. And the fourth thing is business continuity plans. If systems are out for 1 week, 2 weeks, 3 weeks, what happens? How do we continue operations? And they have also matured very much on the design and implementation of those business continuity plans.
Thank you, Chad. Just a couple of comments before we send it over to Stephanie. I guess first I kind of resemble the remark about being guilty of the spam, although I haven't fallen prey yet. But it was just last night I had called home back to the office. It was later last night, so a decent time there. And I said something like, what is this email? I don't recognize this name. Yeah, that's the spam notice you got earlier, right? So I was concerned, am I going to forward this? So anyway, luckily someone caught me. But to your point about the kudos to the industry, and you mentioned the supervisors as well, about this shift to remote work, staying connected. I mean, in the end, the ability to do that, the kind of the protection backbone of our society, all of that still happened, right? Claims were paid, policy. From the standpoint of the regulator, I don't recall seeing any complaints about a delay in pay. And I do think that there is a testament to that about the system that's been set up. Certainly there's a lot of work still to do, and from a governmental bureaucracy standpoint, there were challenges along the way, but it happened pretty quickly even for us on the government side, which I was really pleased about. So Stephanie, with that, send it over to you about what some of the insurers are doing to safeguard these rapidly evolving, the nature of these attacks.
Yeah, so certainly staying up to date on the evolving technologies and risk practices, trying to exchange information with specialists, working with specialized vendors, having the penetration testing. We, Swiss Re, have our own teams doing that, but also using outside vendors to try and test simulation of crisis management of senior executives. And little things like a lot of senior executives have assistants who help them monitor their inbox. Make sure it's the executive who catches the phishing email and not the assistant, right? Because they have to learn because they're probably the most vulnerable ones, right? And impersonation issues. So there are a lot of things that you can do in the organization based on what we know today. I think one big piece, though, is also looking ahead, right? And looking into the emerging risks and these new technologies, but also the emerging risks generally of what does cryptocurrency look like in terms of, does that, for example, is that going to increase cyber risks, and what are those going to look like? I mean, we realized that hackers, they would go and hack companies, and then when they saw the insurance policies covering for cyber attacks, they'd look at exactly the policy coverage, and then they'd make that kind of ransom demand in that amount, because then the insurers would pay. So being much more sophisticated, because we know there's still a lot of data that is not available, and we'll get to that maybe a bit later, but it's exchanging information, being on top of these things, but really also looking at these new technologies, or sort of quantum computing. And at Swiss Re, we have our yearly sonar report, which just came out this week, of emerging risks, and there are two articles in there talk about quantum computing, crypto assets. Does that mean that we need to now adapt our IT security and our cyber practices internally, because this is all this new technology that's coming? So being aware of those things, being ahead one step. And the last thing, go back to a point that I mentioned earlier, is the defenses in a lot of our companies and the resilience is, the defense part is good, but the resilience also requires us to be able to do recovery. So when some things do go wrong, and Judd touched on it, who's responsible for what, how do you communicate in a crisis? Well, how would you get your data back if it's been frozen? Do you have backups? Do you have redundancies in your systems? So some of those things, really also paying attention to not just having good defenses, but also ensuring that the recovery if something goes wrong is solid, it's tested, and it's known what happens, so back sort of in the direction of crisis simulation. So those are some of the points that I would try and raise attention to.
Great, thank you. Thank you both. So I think we're at the point where we're going to check our poll results. Can't read that. So the question was, how has the insurance sector's ability to manage cyber risk changed over the past 2 years? Yeah, probably not a surprise, I guess, right? Okay, and feel free, if any of the panelists want to comment on the results, feel free to do so. But I don't think we were surprised with that one. So let's move to round two of the questions. This one is cyber operational risks. So this section will consider how supervisors and insurers are addressing the trend seen during the pandemic towards an increased reliance on IT third-party service providers and the implications to an insurer's cyber resilience. The poll question we have here is, do the benefits of outsourcing critical IT services to third parties outweigh the risks to ensure cyber resilience? Yes, no, depends on the facts and circumstances, none of the above. Okay, so for the first question here, let's go back to Rebecca, and then we'll send it over to Stephanie after that. And the question that we'll pose, Rebecca, is coinciding with the COVID-19 pandemic, many insurers increased their use of IT third-party service providers, such as the cloud, as we've noted earlier in the discussion. What does the insurance sector, both from a supervisory and industry perspective, need to consider when assessing and mitigating risks associated with outsourcing critical IT services to third parties? Rebecca?
Yeah, thanks. So I think, it's been noted, through the first part of our conversation this afternoon that, the digital supply chain is getting more complex. It's getting longer. I actually just throw in a quick stat, if I may, but I was looking at a report by the International Data Corporation, the IDC, who said that today in 2022, 65% of the world's GDP is digitized, meaning reliant on digital networks. So, it's pervasive. That digital supply chain issue is really crucial. But at the same time, I think it's becoming more complex. It's also becoming, more concentrated. So, at CyberCube, we talk about single points of failure. And the single point of failure is essentially a key technology on which, which entire companies or industries rely. And the failure of that technology would shut down an entire system and affect many end users. So a kind of super spreader technology, if you like, in terms of impact. And, we've seen some of those key technologies, the likes of cloud service providers, operating systems providers, we've got payment services providers, etc., email servers, all vulnerable, and some of the recent examples would include the likes of SolarWinds or Colonial Pipeline, Twitter back to 2020, and I think we just mentioned Log4j already today as well. So I think, supervisors may, want to inquire of the insurers under their jurisdictions, can insurers identify those single points of failures within their own business? Can they quantify the impact on their business of that single point of failure being attacked? I think you were just talking, Jab brought up tabletop exercises and actually, role-playing, sort of scenarios through the company in terms of operational resilience. But, what does that look like in terms of impact on the balance sheet as well? Can you quantify that? So we mentioned, the pandemic having accelerated remote working, the adoption of cloud technologies. I think other items I would note would be that, previously firewalls were in place around companies, and that they really were the defense, the perimeter, that first line of defense against cyber attack. And I think the speed of this change to remote working has really broadened that attack surface and opened it up. The firewall is no longer. So, really relying on, educating your people and making sure that they are alert to the likes of sort of social engineering and phishing. You're making sure that the processes are in place to ensure that those defenses are strong. So, supervisors could raise awareness of the various frameworks that insurers might operate under, like the NIST framework, for example, or ISO 27000. But also, I think only then really does technology come into play, and that's cyber security, and there's trillions of dollars each year spent on cyber security, but it really means nothing unless you've educated your people and you have those processes in place as well. So yeah, that would be my kind of opening salvo to that question, Gary.
Thank you, Rebecca. To you, Stephanie.
Yeah, so what's really important, and Rebecca alluded to some of that, and we've talked about, is the end-to-end view on your processes and what role does technology play in a full end-to-end view. So that will obviously include your own systems, but the systems of your third-party providers. So simply put, when you have a high dependency on third-party providers, you have to have an excellent third-party provider management, and that would include, I think, the recent war in Ukraine, for a lot of us, has shown there are a lot of third-party providers perhaps that were working out of Russia or working out of Ukraine. And so what does that mean if you have people working there that maybe are not, employed by you, but they're a critical part of your process? Do you even understand what they're doing? So having this very, basic view of inventory of who your providers are, looking at reducing the risk by reducing perhaps the number of providers that you have, which then you have to watch out for the concentration risk, but it's also other factors that need to be looked at in terms of the geopolitical situation. I mean, a lot of us are sort of looking at the news and is globalization coming to an end? No, it's kind of being rewired, and it's no longer onshoring, nearshoring, offshoring. It's called friendly shoring. So working with companies in countries where there's maybe a more political stability or more associated values, and all these elements that increase the complexity that Rebecca was mentioning, not just on a technology perspective, but also in an entire sort of environment that you're in. The company's getting more complex. But so going back, perhaps back to basics on a lot of these things. So end-to-end view, knowing your processes, knowing where the providers are, what they do, and what plans do they have in place for their own cyber resilience, and looking at your cyber resilience, doing crisis simulations, and then really making sure that you also have a backup plan, the redundancy, the recovery work, the relation to the business continuity plans with the IT continuity plans, making sure they're really well connected, and then training the people on we talked about these, phishing campaigns and cyber awareness, and these are really important points. I think the access management point that was raised earlier is super key, right? Reducing, as Jad said, to the zero trust in terms of why do people need access to all this stuff? And so minimizing that, but managing it mostly, is really key. So I think there's a lot that we can do that sounds, I guess, basic for somebody who does risk management for a long time, but the resilience concepts are the same, whether it's cyber, technology, and other factors, and looking at those.
Thanks, Stephanie. I think you just touched a little bit on this, and maybe a follow-up. I'll go to Todd first, and if there's anything you'd like to add. It seems that events impacting insurers' operational resilience, and maybe it's COVID-19 or the Russian-Ukrainian war, are occurring with kind of greater frequency here, and having kind of an increased worldwide impact. And it's in part due to, I think, something that Rebecca had noted, which is our growing technological interconnectedness, and the dependence on that. So what can supervisors and insurers do to remain ahead of the associated cyber risks? So first to Todd, and then if you'd like to add something, Stephanie.
Yeah, maybe a couple of things on this. I know the FSB has done and continues to do work here around cyber incident reporting, so knowing what's going on and being able to share that. And third-party risk management, and now there's fourth-party risk management for third party. And the ORTF may evolve in a similar direction. But it's also, I think what we've heard from numerous people today is, from a supervisor's perspective, do you know what the risk is to the institutions, and do the institutions know what their risk landscape is? And asset inventory and things like typical cyber hygiene. But it ultimately leads to that question again of, it's not if it's when you are attacked. How resilient are you? And as an example, we've seen where we've asked firms, hey, if there is an incident and you need to fail over to a backup system, have you tested that in real life? So not just have the plan, But have you tested it? And they said, yep, we test it every quarter on Saturday. Great. What's your working load on Saturday? It's 5%. Have you tested it during the week when it's at capacity? And they're like, oh no, we would never do that. I'm like, but that's what you need to do. You need to try and simulate real world experiences if you have this capability in a resilience aspect. And so from a supervisor's perspective and from a firm's perspective, it's putting all of these together, and I think Stephanie said it together, this end-to-end view, and trying to get that from a perspective of, okay, this is how you identify risk, and if something happens, this is how you resolve it.
Okay, thanks, Todd. Anything you'd like to add, Stephanie?
So I think there are also providers out there, right? So that do, like tech radars or they rate companies, and there are some that are very good, some that may be less good, but finding out for yourself as a company or for the supervisor, figuring out which ones can be a useful piece of the puzzle in order to figure out how resilient the companies are, the insurance companies are, but also to figure out maybe where those vulnerabilities are, depending on how those external parties rate the cyber resilience of these companies. So there is a lot out there also, I think, to take into account. We talked a lot about the basic things, but there are really some really good companies out there that are worth looking into. And so I think the last point really is this risk, and Todd mentioned it early, it's not A, going away, and B, it's not getting easier. It's always getting more complex. Sometimes we feel, or I personally feel, it's like you're always one step behind those really smart hackers. And so it's making sure that the companies are very much aware, and that the senior leadership is very much aware, and that there's appropriate investment in helping manage and mitigate that risk, because it is going to be around for a long time, and it's like fast evolving, fast changing. So you always have to be on your toes when it comes to this. So having good teams and supporting those teams with the right resourcing, I think, would be another last point that's really, really important for everybody to do, including supervisors and other companies out there, not just the insurance and reinsurance industry, right?
Yeah, excellent. Yeah, thank you both. So why don't we check our poll, see what the outcome of the poll was. So the question was, do the benefits of outsourcing critical IT services to third parties outweigh the risk to ensure cyber resilience? Depends on the facts and circumstances.
Best supervisory answer you can
Yeah,
give.
that's right. This is very legal too. Okay, so let's move to the round 3, where we'll focus on cyber underwriting risks and market development. It's going to, let's see if we'll pull the poll up, and we'll read the polling question here. So after many years of affirmatively and silently underwriting cyber risks, are data availability and actuarial modeling still a problem? Yes, but for different reasons. Yes, same reasons, or no. So why don't we start here? We'll go to back to Stephanie and then Rebecca. And the question that we'll pose is the lack of data availability and modeling issues have been mentioned as constraints on cyber coverage growth. Yet insurers have been underwriting these risks for some time. It's only natural to think that there's more data on claims and better models compared to 10 years ago. Are data availability and actuarial models still a constraint on the growth of this market, or are there other factors? So first we'll send it over to you, Stephanie.
So I'll give the answer to that one. The answer is yes. Things have evolved, and there is more data around, but again, there isn't the level of transparency, for example, that would be useful. So if you differentiate single risk events from the accumulation piece, the single risk events, it's easier to get that data perhaps, but there are still very few very large events that would provide data. If you compare that to the Nat Cat world, there is still very, very much a scarcity of what's needed in order to really create solid models. When you look into the accumulation space, there's virtually no data out there, and it's very, very difficult to get to. And I know there have been attempts, I know that ORX, for example, the Geneva Association, so there are attempts of industry bodies to try and create more transparency in that data. And I think to myself, it's great when these platforms are created and the data is put on there on a voluntary basis, but which insurance company would disclose in great detail what's happened to them? I'd say, if we're very honest, very few would go into a lot of detail, because it it's really still data that's not shared transparently because people worry what it could lead to, right, in terms of reputational damage. So I think we have a long way to go there, but there are elements of it that we can start differentiating when we, as an insurance coverage provider, right? So not talking about our own resilience, but what we do for our clients, especially in the reinsurance space. So at Swiss Re, we've noticed the market's hardening also, and the temptation to jump in with both feet and say, oh, these, the growth in the premiums would be fantastic. But it's really, really always to be taken with an enormous amount of caution. It's very difficult to calculate how much capital you need to underwrite what level, because there's just not that much data. There's models there, and we can take combination of vendor models, but also internal models, and you can increase the sophistication over time. But it's really not there yet, and we've decided to remain reasonably disciplined in sort of not jumping in with both feet into this market. And I think the Log4j example and more of those to come, where it becomes almost like an uninsurable event, such as pandemics. If things happen all over the place in the same way, because some key elements in the technology are used the same across very many different applications, therefore very many different businesses. I mean, these are things that we definitely absolutely worry about, and we worry about the physical implications in terms of business interruption, for example. That becomes hugely expensive to try and cover that, and when we noticed it during the pandemic, but that's true for cyber also. And so, property covers, looking at those and figuring out, okay, if it's a cyber-induced fire, that can be clearly defined, it can be covered, it can be insured. That feels more like our core business. But when it's much more loosely sort of defined in an accumulation or the silent cyber of something that happens, you're not sure, is it attributed to cyber or is it attributed to something else? And becomes really fuzzy and hard for insurance companies to work, because even the data you might have might not be particularly reliable, and there's certainly not a lot of history in the data. So it's hard to predict anything going forward. But there's an awareness in the industry. There's something that needs to be done. There's a market out there, but you have to be smart in terms of your coverage and your ability to monitor your client's resilience in terms of cyber risk.
Yeah, really interesting. Rebecca, let's turn it to you, please.
Yes, definitely raised a lot of great points there, and I didn't jot them down fast enough to maybe be able to address all of them, but maybe to sort of pick a couple. I suppose, firstly, Gary, just to the phrasing of your question around lack of data, sort of limiting the growth of the cyber insurance market. I think cyber insurance market is still a relatively small market, but it is growing pretty fast still. So, it's estimated at around kind of $8 to $10 billion right now in the affirmative market, and still estimated to be at around 25 billion in 3 years' time. So, I am still optimistic for the growth of this line of business. That's not to say, though, that there aren't constraining factors for sure in that growth. Just on the modelling point, I'll come back to the point I raised earlier about that fast evolving nature of cyber risk. I think, in many ways, modelling cyber is like modelling terrorism or climate change, where, the events that are likely to occur, those systemic events that are likely to occur, are likely to be unprecedented. So, that adaptation, that changing to circumvent defences really does kind of make that historical claims data somewhat less relevant. Attacks are unlikely to be repeated, but I do think that having that data available is important. But you also do need to build a forward-looking view of risk when looking at modelling cyber, particularly. Saying that, claims data is definitely becoming more robust. Particularly that attritional loss data, as Stephanie mentioned. Loss ratios in the cyber insurance market have really increased in the past kind of 5 years, from 2015 to 2020. Sort of the data's pretty robust, and they went from mid 40% to kind of 70%. So as a result, I think insurers can now be more accurate in pricing and coverage related to those individual risks. But that cat load element in pricing, still does require modeling. We've not yet seen a truly catastrophic cyber event for sure. There have been an increasing number of near misses. Mentioned a few just a minute ago, SolarWinds, Colonial Pipeline, NotPetya back in 2017. All of these events can be used to calibrate models, and combining those actual events with threat research, with expert opinion and other data sources, does help. CyberCube is a modeling company, so if you haven't looked at the bio, just that for full disclosure, I'm predisposed to be optimistic about the potential for quantifying cyber risk, but we're also very realistic. Modeling is still in its infancy. It's becoming more sophisticated. There's more and more investment being made by either standalone service providers such as CyberCube, or in-house by insurers and reinsurers themselves. And there's kind of a lot at stake, really. There's a lot of interest in developing robust modeling, because it really will help to unlock that cyber market. I'll just mention one point on the availability of data, and then I'll hand back to you, Gary. But I think that outside of that catastrophic claims data, the problem's almost inverse, in that there just is too much data to choose from. It's really hard for insurers and reinsurers to select the data that would offer the best signals for decision making around underwriting individual perils or portfolio management. And I mean, as an example, at CyberCube, we've got 8 people who are dedicated in their day job to identifying data sources, to onboarding those data sources, and then interpreting that data to use in our models. And then on top of that, another dozen analysts whose job it is to turn that data into actionable insights for our clients. So, we've got tons of data available. How do you make sense of that and turn it into information on which you can make decisions? That, I think, is the problem.
Yeah, thanks, Rebecca. Maybe, Jed, I'll go to you with a follow-up here on, and it's kind of a stream of what Rebecca was noting, which is, how are the insurers then coping with data issues and, some of the modeling limitations?
The first thing I would like to highlight is this is not a new problem for insurers. Every time insurers launch a new line of business, so when they launched, environmental liability, they are faced with the question, how do you price this risk given the fact that we have limited data? So basically, to price a risk, you need frequency numbers and severity number. So if you have a portfolio of 1,000 cars and the average cost of a claim is going to be 300, and there's a frequency of 1/3, then the premium is going to be 100. The difficulty in the early stages of cyber is you didn't have that data because the number of players were limited, and we didn't have data for many years. We didn't have data at all to price the risk. Ironically, the good news is that with the increase of frequency of cyber events and cyber claims, there are more and more data. So I would say I'm not worried about this. I think those players who are active on the cyber insurance market are getting better and better at pricing the risk. What we are still missing, and Rebecca referred to that earlier, is the catastrophic event, going through supply chains, and so here it's not an actuary that you need. What you need to do is what we referred to actually in the previous session on climate is to do scenario analysis, do what if, and this is clearly this is not a science. This is an art. Actually, this is good news because it means we will continue to need people in the insurance industry, and we will not be able to delegate everything to artificial intelligence. It's more, it's a reflection that underwriting is more an art than a science. And so it's basically putting a lot of people around the table to imagine the scenarios, to use their own judgment, their expertise. And sometimes they will be wrong and sometimes they will be right. I think it's part also of the insurance business to recognize this. I will come now to the point of the sharing of data between institutions. And Stephanie, you referred to a number of initiatives, including one that the Geneva Association launched 4 years ago, and which didn't progress, probably because it was too early. Also, there was a question whether it's the role of a think tank to do this. But certainly in the early stages, when you had very limited number of players in the cyber insurance market, you had no appetite to share the information with other players. Now that more and more players, carriers are active on the cyber market, things are changing. There are two interesting initiatives, one initiated by the Lloyds on the London market, another one more US-based, Cyber AccuView. And I think also the industry will mature and we will progress in its ability to price properly this risk.
Well said. Thank you, Jad. And Stephanie, I'll send it your way to you, and then maybe back to you, Jad, although I think you addressed a little bit of this. So the data issue is not only impairing the pricing, but also the measurement of exposures covered silently or affirmatively. How are insurers measuring exposures to affirmative and silent exposure to cyber risks, and how are they mitigating these risks?
So I think we did touch on it a little bit, right? And I just wanted to, so my thoughts when I was listening to Jad, I'm liking his optimism, because I think I came in with maybe a little bit more of a cautious view on it is going to evolve, I agree, but for us as insurers, it's never fast enough, because you'd like to, sell more coverage and do your job. There's still huge amounts of challenges, but I think when we look about some of the tools that we can use for when we do cyber coverage, in order to manage that risk that you have on your books as an insurer, you have to understand how much appetite you have and what tools you have at your disposal to sort of cap that. So, quota shares, stop losses, things like that we use in order to make sure that the risk can be spread. I think another very basic tool is having a diversified portfolio, right, of geography, industry segments, size of the companies that you insure. In order to make sure that when the data starts coming and your models become more sophisticated, and again, I think using vendor models combined with what you do internally to increase the ability for the sophistication of the scenarios and the models, but also what Rebecca was saying, too much data, and how do you even read something that's meaningful out of all that data? So there are still plenty of challenges, but there are things that we can really start doing. The big events are going to be the difficult ones, right? In terms of no coverage on the big stuff, or you say you can share some of that. I think that's maybe it's a bit of a fuzzy answer, but I think the sort of our thoughts at the moment without going into too much detail.
Yeah, thanks, Stephanie. Go ahead, yeah, Jen.
Yes, just to add to what Stephanie was mentioning, you referred, Gary, to the question of silent and affirmative coverage. And I think there's a great awareness, an increasing awareness within the industry that then there's a need to monitor both exposures, particularly the silent one, because very often, and this is probably more the case for SMEs, the wordings of these policies were made and designed and drafted at a time when there was no cyber risk. And so the processes that many insurers are now or have engaged in the past couple of years is to really screen their portfolio of traditional property casualty policies and actually proactively exclude cyber. And there's another reason why to do this beyond monitoring their exposure, is that really this is not being priced. When the price of these P&C policies was developed, it was not meant to include cyber. And so if you think that in front of a risk you need to have a price, it's probably healthier not to include cyber. So a lot of insurance companies are indeed screening in a very detailed and systematic manner their portfolios to exclude cyber in most cases from the traditional property casualty policies, and to concentrate it on the affirmative cyber policies. That's the first thing I would highlight. And the second thing I would highlight, within affirmative cyber policies, I think there's a lot of work currently initiated and more to be done on the wording of these. And I'll give you one example. Rebecca referred earlier to the whole concept of hostile cyber activity. So something that is not necessarily driven by money, ransomware, that may be driven by more ideological motivations. And so you fall in between war, which is normally excluded because it's war, and terrorism, which in many countries is captured by terrorism pools, etc. And so what falls in the middle is unclear, and the wordings are ambiguous. And frankly, my perspective is that the last thing the insurance industry needs after the pandemic and the BI debate on the pandemic coverage is another ambiguity about whether hostile cyber events are being covered or not. And so we are seeing insurers working on their wordings to clarify this topic of hostile cyber activity that falls short of war and that is not terrorism.
I'd like to jump in and add another example too, because I think having these specific examples so that we can start feeling and grasping this is really useful. And when we talk about sort of the silent cyber in property, we have the inherent versus the residual. So the inherent, again, is, like I said earlier, if you have a cyber-induced fire, it'll be covered, and I think that's part of our day-to-day business, right? But if suddenly there's a theft of data, well, how do you define, is data property? Is that property coverage cover then the theft of that data? So like Jad was saying, is really being precise about the wording and using cyber conflict or cyber war. If you look at the definition for United Nations of war, it's really hard to imagine if a cyber conflict could ever reach that level. So there's a lot of debate on these words that mean a lot, especially when they're in a policy and then when something does happen, and that's where I'm really hopeful too, in addition to the optimism that Jad said with the evolution of data and the models, the wording and getting more clarity over time. And for that, I think, fortunately or unfortunately, we need to go through more cyber events and cyber issues and have more experience, I guess, in order to ensure that we know what we're covering, because ultimately that's what we want to do, is be able to play out those claims when something happens and to be true to our promise. But this fuzzy lack of transparency is what's really, really hard to deal with. Yeah. And casualty, liability, that stuff gets even harder to define, and that's going to take longer than the portfolio side.
Really, really interesting. Thank you both. Well, why don't we pull up the poll results, see what the folks in the audience said. So the question was, after many years of affirmatively and silently underwriting cyber risks, are data availability and actuarial modeling still a problem? Yes, but for different reasons, yeah. Okay, again, probably not a surprise. So this brings us to our last round here, which will be followed by, we'll maybe have a little time for maybe 2 or 3 questions at the end. And if we don't, you can catch one of us at a reception or something. But so the last one, this section will consider market developments in cyber underwriting. So maybe Jad, I'll start with you first on this, and then send it over to Stephanie. And this has been brought up. I think Stephanie had touched on this a little bit earlier in the discussion, which is talent shortage being one of the main issues, affecting not only the insurance sector's cyber resilience, but also its underwriting activities. So how are insurers dealing with the shortage of cybersecurity experts, and how can the shortage of cybersecurity experts impact cyber underwriting? Jad?
Yes, this is obviously a very important question. It's almost, I would say, a human resources question, but insurers are about human resource. It's about people. So yes, there is an issue of talent shortage. There are estimates that float around that the world is missing 3 million cyber experts, and so there's work done on the supply side and work done on the demand side. On the supply side, there is an increasing number of academic institutions which are launching cyber programs at the undergraduate level, at the graduate level, at the postgraduate level, within in executive education, etc. So that's one thing. This is not in the hands of insurers, but I think it's worth mentioning it. The supply is increasing. Now on the demand side, so on the insurer side, what are they doing? Well, they are working in two directions. They are working on upskilling and reskilling some of their own employees. So some employees who are not experts in cyber, but who maybe come from IT and who have appetite to learn more. And we see an increasing number of insurance companies paying for programs on cybersecurity for these people. So that's one thing, working on their own workforce and trying to reskill or upskill some of their employees. And then they're working on attracting talent. And so what can they do? What do you do if you're an insurance company and you're competing for someone who is a cyber expert and who has, for example, an offer by a cybersecurity firm? Well, you do two things. The first thing is you emphasize the purpose-driven nature of insurance. Insurance is not a business like any other one. It's really about protecting people, businesses, communities, society against risk, and supporting people when they are in trouble. And I think many of us in this room are either in the insurance industry or working for the insurance industry and with the insurance industry. And I think we all realize that insurance is really a purpose-driven business. So you can do this, you can emphasize, and I think it's fair to say that younger generations, probably more than my generation, are more driven by purpose in their lives. So that's one thing they can do. The second thing they can do is they can, which they do, insurers, is they put forward the breadth and depth of a career that you can have within an insurance company, even within cyber. So even in this panel session, we had the discussion about the insurers protecting themselves against cyber risk. So maybe you join the cybersecurity team of the insurance company, and then you can move on to a more business-driven role. Many insurance companies, particularly the ones who are working for commercial lines, have risk engineering units, and one division or one department of this risk engineering unit is precisely cyber prevention for customers. And then maybe they will move to underwriting. So there is a wide range of jobs, both business-facing and not business-facing, that insurance companies can put forward to attract these talents, and which they are increasingly doing.
Thank you, Jen. Stephanie?
There's really not much I can add to what Judd just said, because it applies to everything we're trying to do at Swiss Re. So internally, trying to connect the teams via doing projects of our own IT experts versus the underwriting expert teams, with the chief security officer function, for example, and those who do the penetration test, that there are pockets of expertise in the company with certain levels of skills, and bringing them together, it enriches their experience, but it also creates a more powerful view on what needs to get done. And I think the talent is also the question about where do you go for that talent and who you're competing against for that talent. And sometimes it's hard to compete against the big names that are, I don't know, sounds very cool, or used to at least work for Google. Who wants to work for Swiss Re when you can work for Google when you're in the cyberspace? So trying to create that proposition, like Jad said, around, well, our motto, our mission, our vision is to make the world more resilient. Is that what Google's trying to do too? I'm not sure, but that's what we try to do. This is what we say about ourselves as a company. So connecting on that level with especially, the younger generations, the ones who are coming up with the skills that we need, and making it an attractive prospect over maybe a bit of the longer term, and all the working conditions that come with that. And these are things that we're actively doing at Swiss Re, and it's challenging. It's really a challenging space. So I think we just need to stay stay on it, and therefore having the focus of top management that is going to then put those resources at the disposal of the company and of those teams so they can do their work. I think that's the last element that I'd probably add to all the points that Jad already brought.
Right, thanks, Stephanie. Thank you, Jed. Yeah, we experience much of the same on the supervisor side. And I do think it's a collective effort. It really is a challenge, a collective effort. Maybe it's a little bit of a better job of marketing ourselves, right? Because the challenge, you said it, Stephanie, it's a Google or a Swiss Re. But to Jad's point, it truly is a purpose-driven endeavor. So I think if you're truly interested in a purpose-driven endeavor, something that's been around for a long, long time, that will be around for a much longer time. So hopefully we can do a better job. It's something that we talk to all of our younger employees and those we're trying to recruit to come work for us, where it seemed boring in the past. It's not. Right? No. So thank you both. So looks like we have maybe just why don't we take a few minutes to take a few questions. I don't want to expose our panelists to a whole array of questions after they've been up here under the lights, but let's, I think there's a roving microphone. We've got Yoshi here in the front. It looks.
Just the last word, Stephanie, make the world resilient, or so on. Just under this mission, my question is just, particularly third-party service provider issue. And when I see OECD, we did last year sort of invite a third-party provider and insurance companies, big one, to see how they use third-party service provider, including cloud. And we are amazed that the insurance companies are so dependent on third-party service provider, not only cloud, but also in data collection, but also risk assessment, and even underwriting this area. And those are big ones, and it's very, very concentrated. So my question to the panelists is, when we experience, financial crisis, those big ones, assuming that those big ones is dysfunctional because of cyber attack, what could happen? And that's also not only insurance issue, but also banking or the financial industry. So just my question to you is make the world resistant or sustainable. I wonder we could just change the paradigm, not seeing those risks from the insurers or banking regulators control through the entities, but more focus on those service providers itself. In other words, somebody should monitor or just supervise those issues. Otherwise, the world is not safe enough. So my question to you is, how do you think this issue?
So I think what you're seeing now is you have DORA in the EU. The Bank of England came out with something the other week around third-party critical service providers. I think you're seeing some movement towards that. I'll just say also on the flip side is there is a lot of benefits to some of these third parties, take cloud, for example, that enable these firms to actually be more resilient than they would have been if they haven't used that. So I think to your point, there are pros and cons to some of these, and as the industry continues to grow, we'll see if the big four continue to be those big four. But I think jurisdictions are starting to really focus in on how to answer that question. How do we supervise these larger, critical service providers that haven't been regulated before?
Thanks, Todd. Thank you for the question. I wonder if, I know Rebecca and Stephanie touched on this earlier, if there's anything that, Rebecca first, if you want to add anything there.
Yeah, certainly. I think those critical service providers, and I reference that at CyberCube we call them those single points of failure, because a lot of business dependencies hang on the resilience of those particular technologies. I think it is becoming more concentrated for sure, and the potential catastrophic nature of those failures is increasing as well. So cloud outages, major data breach events, email servers going down, operating systems being compromised, I think are very real risks, and something that one way in which CyberCube kind of tries to assist in that regard is to help insurers to identify those single points of failures and where those dependencies lie, not just within their own company, but also where they are underwriting portfolios of cyber risks, where those concentrations lie in their portfolios. And then to build out those scenarios, what is a realistic scenario? It's highly unlikely that, the whole of, Amazon Web Services will go down for 24 hours. So what is likely? It may be that 2 or 3 major data centers in the US could go down for a period of time. So working out what those realistic scenarios are, and then working through to try and sort of quantify what the damage might be should they happen, but also from a supervisor point of view, looking at how we kind of mitigate and minimize the potential for those particular scenarios taking place, I think will be a good place to start.
Thank you, Rebecca. I don't know if there's, Stephanie, if there was anything you wanted to add to that.
I mean, we try to look into, and I'll use the cloud services as an example because it is quite front and center. I mean, cyber does, resilience extends far beyond, but so we try to look at saying, okay, can we be cloud agnostic, and can we use several providers in order to diversify the risk of dependency a little bit? And in some cases, it's almost mandated by the regulator. So if data in China needs to stay in China, needs to be done for us in the Alibaba cloud. You can't. You have much less choice. So there are areas where there is a sort of this diversification that is forced upon you when you're a global company. But ultimately, it's really difficult to do because you can't have a real cloud agnostic strategy. And so you kind of forced into that dependency, but there's many other things that you need to do in that dependency in terms of how do you use the cloud, how do you upload the data, and how do you structure the data, and how do you use what actually these providers put at your disposals, the tools that they have in their cloud services, and using more and more of those tools because they are better than something you could develop in-house. So there's a lot of things you can do in order to create a higher resilience. And like Rebecca said, I think AWS going under across the globe at the same time is an incredibly unlikely scenario. So why waste time on that? But yes, focus on where your data is. So for us in Switzerland, our data still needs to be in Switzerland, right? So there's still some local cloud services that we use, and playing around with different, and it's not cheap, right? And it's not with lack of complexity, which comes with its own risks. But it does somehow a little bit manage to sort of keep the lights on in terms of you're safe that if your data in one country is there and your data there, and you can do some redundancies. There are things that you can do that will help manage and mitigate the risk a little bit. And working on realistic scenarios, I think that's absolutely spot on, yeah.
Thanks, Stephanie. Okay, we'll should we take another question? Tough for me to see, so wherever the roving mics are.
Hi, I'm Robert Gordon with the American Property Casualty Insurance, and I'm going to go back a little bit to Stephanie's point about making the world more resilient. One of the significant changes in the United States market, particularly this last year in cyber insurance, is insurers working with their policyholders to implement better cyber security hygiene. And so that's been one of the very significant changes, is tightening the underwriting standards and working with the policyholders. There are also some initial studies now showing that businesses are in fact significantly improving their cybersecurity in the United States. And very recently, APCIA, at the request of the US administration, has been working with our member company, Cyber Insurers, on the leading cybersecurity practices. And my question for the panel is, to what extent do you believe insurers can play an increasingly beneficial role in reducing cyber-related systemic risk through our loss control and underwriting standards?
Thanks for the question. I'll pause. Anybody want to take a first stab at that?
I'm
Please,
happy
Jen.
to. I think, thank you very much for raising this question. I think this is very important. I don't think it's specific to cyber. In general, insurers are increasingly playing a role in risk prevention and risk mitigation. And I'll give two examples. One, I refer to risk engineering arms or services that many carriers, especially the ones that are active in commercial lines, have. And sometimes this is a free service that is adjacent to underwriting, and sometimes it's a fee service. But in all cases, it's really advice to the companies on how to protect themselves against risks, fires, but also cyber. And increasingly, insurers are offering pre-breach and post-breach services, and the post-breach are very important as well. Which lessons are we learning from the unpleasant experience of an attack we've had? How did our crisis management procedures work? What should we change in the future, etc.? I would add to that increasingly insurers which are active on the retail side are also developing these prevention programs. We see a number of insurers having programs to sensitize households on basic cyber protection measures, and what do you do when you're active on social media, and what are the things you really need to think about when you're active on social media. And they obviously they don't charge anything for this, but they do this because they believe it contributes to making the world and these families safer.
Thank you, Chad. Any other panelists want to weigh in?
Yeah, I'll add if I may. I think absolutely, the insurance industry has always played a role in setting standards for safety and security. Go way back when to the period when there were outbreaks of fires in commercial property, and that sort of brought about the stipulation that sprinklers had to be in buildings, for example, or when automobiles became more prevalent. There were safety standards then set by insurers around automobile safety and road safety. So I think this role that the insurance industry is playing in cyber is a continuation of that rich history in the insurance industry, helping to enable society to adopt new technologies and do so safely. So I'm really encouraged by that. Also, I think that there's definitely a sort of more altruistic resilience angle to this, but just coming back to one of the previous questions that Gary put to the panel about the availability of capacity, I think it's also crucial to the stage of maturity of the cyber insurance market, and sort of setting those standards and helping the insurance buyer to be more resilient, therefore will enable them to buy insurance with higher limits and broader coverage, and all of that will snowball into creating a much more sustainable and larger cyber insurance market. So I think there's an added benefit there as well.
Thank you, Rebecca, and thanks again for the question.
Thank you.
So why don't we'll do one more question, and then we'll wrap it up. Looks like John back there.
Thank you, Commissioner Anderson. So maybe we'll end on a high note and talk about, it's John Huff with the Association of Bermuda Insurers and Reinsurers. I thought I'd just ask the perspective, not just standard setting, but the move on cyber products. It's really not, we're moving away from an indemnification product where we're just paying claims for someone that has a loss, really to having a protection product where insurers are coming and stepping in if you have a breach or you have a cyber event or you have a ransom event. And I thought just interested in the panelists' perspective on that role of insurers and reinsurers as offering protection rather than pure indemnification.
Thank you for the question, John. Anyone on?
Yeah, I think I think the answer to that is yes, and that's where the industry has moved. But I also see then there's a reliance on third parties that kind of increases also because it's usually not done in-house. So there's always this push-pull between what can the insurance company provide, and then what other services are they able to offer as well. But I know, I mean, I would hazard a guess, if I asked everyone in this room if they've ever been breached or gotten a notice that they've been breached, everyone might say yes. And one of the first things that happens is you get kind of a notification product that is typically offered either, you know, through the company, but it's one of the insurers' third-party services that might offer this. And that's an incredible value to people to know, hey, not only has your information been breached, but someone's trying to use it. So I think, John, to your point, I think, you know, the answer to that is yes. How insurance companies kind of package this stuff together, I still think they're figuring that out. But we've definitely seen advancement in that area.
Chad, do you want to?
Yes, again, definitely. I think this is a very fair point. I think one area where this makes even more sense is with SMEs. So what we see is, for example, insurance companies that provide crisis management services. So if you're the head of a 5 or 10 or 15 people company, and suddenly you have all your customers calling because they heard you had a cyber attack and some of their data have been leaked, what do? You don't have a call center to take all these calls from your customers. So some insurance companies are providing access to their customers to be able to call, to communicate to their customers that they can call a call center and get some information. Some of them suddenly become exposed to media and they have no clue how to answer to a journalist. And so some insurance companies are also providing media support, always through a provider, a third-party provider. So I think this is a trend we are seeing in the commercial area and also in the retail. I would say, you know, moving away from only indemnification to a wider range of services is definitely something we see. And you know, beyond P&C, I mean, one example that comes to my mind is very much health. Increasingly, insurers are providing prevention services, prevention advice in terms of health, and everyone wins. Of course, the customer, the individual customer prefers to be healthy, and incidentally, it improves the loss ratio. So yes, this is a trend that we see everywhere, across all business lines, and across all segments, commercial, SME, retail.
Thank you, Chad. Well, maybe, unless anybody else, maybe we'll wrap up. I hope our audience members feel like I do. I get a kick out of listening to insurance professionals talk about insurance, and particularly on a topic that where we're, you know, it's relative infancy to a degree, and we're cracking this egg together on how we, you know, the data that we have and how we use the data, our interconnectedness. So this has really been a treat for me. I just want to say thank you to Rebecca, to Stephanie, to Todd, to Jad for your participation on the panel. It is very much appreciated, and ask the audience to share in a round of applause with you.
Thank you, Gary. Thank you, Gary.